Just in the first quarter of 2025, over 15 billion dirhams worth of mortgages were issued in the UAE against properties. Today's discussion is all about mortgages. My guest today is again a repeat on the show. And why I've called him again? Because the first time he came here was 2 years back, and a lot has changed in 2 years. And also, what I realized that just recently I realized that my episode with him was one of my most watched episodes on YouTube, and I was surprised. So I thought I need to get him back to discuss what's happening with mortgages in UAE. Residents, non-residents, both can get finance to buy a property in Dubai. And today's discussion is with a very dear friend of mine, Amit Nainnani from Lion Mortgage. But guys, before I go ahead and start the show, I have one request. Most of my guests who come on the show are either people who I really trust, who I know, or people who I feel will add value. I do not do paid collaborations in terms of getting guests. I get a lot of requests from people that, we want to come on the show. But till the time I don't find the person credible, I don't get them. So I have one request, guys. No matter which platform you're watching this or listening to this, please do share with anybody you feel will gain value out of my podcast, out of my content, because only when you share, that's the time I can actually grow my channel. So guys, if you're watching this on YouTube, please do subscribe to my YouTube channel, hit the notification bell to stay updated. Your likes and comments are really appreciated. If you're listening to this on Spotify, please do subscribe. Apple listeners, please give us a 5-star rating and review. And now let's cue the music. Hi, Amit. Thank you so much for joining us back on the podcast. And, I have to say the first time you were here, that was about almost 2 years back.
Correct.
A lot has changed in the last 2 years. And the podcast we did was one of my most watched podcasts on YouTube.
I guess 100,000.
Yeah, over 100,000 views. So thank you so much for taking this time out and joining in. Amit, why don't you just start with a quick introduction? People must have already known you, seen you, but still, if you can tell what you do, and then we take it from there.
First of all, Tahir, thank you for inviting me.
My pleasure.
And just to give people a background, I've been in UAE for good 20 years. Initially, 17 years, I was working with the banks in UAE, doing mortgages and home finance. And since the last 4 years, I work for this company called Lion Mortgage, where I manage their sales team. And I manage around 20 to 25 people who are working as mortgage advisors.
Lovely.
That's what I do.
Lovely. Now, Amit, a lot has changed in the last 2 years. Transactions have gone up, interest rates have gone up, now coming down, right? A lot of people still think that if they are not living in Dubai, they are non-residents, they cannot get mortgage in Dubai.
Okay.
But that's not the fact. Non-residents get. So tell us what exactly, what do the banks finance if they are non-residents, they are not living here? What do the banks give in finance?
As per the current policy, banks are comfortable lending to non-residents. There are 3 to 4 banks who are very comfortable.
Okay.
They lend up to 60% to a non-resident.
Okay.
There are some banks at times they could do a slight deviation and try for 70 as well.
Okay.
But all that depends on the client profile and case-to-case basis.
Right.
So there's no standard rule that one can get 50, one can get 60, or one can get 70. It all depends on the client profile, the property value he's looking at, and the loan amount he intends to borrow.
Okay.
That's there for a non-resident.
Right. Now, but for a non-resident, what does the bank actually check? Because they don't have income here, they don't live here.
Correct.
Right. So a lot of people, especially when they're overseas, they ask, how will the bank give me money?
Correct.
So what does the bank ask in terms of documents?
So there are 2 scenarios. Let's say if the client is a salaried client, 1 or 2 banks underwrite them on their salary and their liabilities in their home country. How they underwrite a client in UAE. So if someone's salary is 50,000, they take a 50% DBR, they pull out an AECB report and check his liabilities in the country.
Okay.
Similarly, if they want to underwrite him on his income criteria, we will need his income bank statement where his salary is coming, his country credit report to see his borrowings if he has cards and auto loans or mortgages there, and the taxation document to understand what is the exact money he's getting in hand, because many European countries and other countries have taxation as well.
Yes.
This is the salaried profile. There is self-employed where they do complete underwriting, which means company documents, company bank statement, company credit report, company audit report,
Right.
and then they underwrite him as a complete self-employed non-resident.
Right.
Third criteria is lending on a client's balances.
Okay.
There are two banks who look at their personal balances in their personal account. It could be a saving, it could be a current account. They don't accept call deposit, they don't accept fixed deposit, they don't accept an investment account.
Okay.
So they purely want to see any given point of time how much is the money he has parked in his personal account, and on that basis they underwrite his eligibility.
That's liquid cash in the account, basically.
Correct.
And I think sometimes we've had some cases, where clients had the money in their company account but not
Correct.
in their personal accounts,
Correct.
and because of which the banks are not
There
so.
I'll remind you, the flip was, it's very difficult if Amit owns the company,
Right.
has a personal account and has a company account, then they can still club it
Right.
because Amit is the sole owner.
Right.
But if Amit and Tahir are owners,
Right.
they can't take Amit's eligibility on a company bank statement, because how do we justify how much money is parked in the business from Tahir or Amit?
Got it.
So if Amit was the sole owner, then company bank statements can be taken.
Okay.
Otherwise, it's more the partners, difficult to take the company bank
Got it.
statement.
But if it's like a sole proprietorship, sole entrepreneur,
Or assume husband wife.
husband
So
wife.
husband wife, both are partners, both are borrowing together, then we can still do it.
Okay. On this point, Amit, if someone is taking a mortgage, if say buying a property, husband and wife together,
Okay.
right? In that case, how does the mortgage work? Does it work? They need documents for both. One, how is it?
First of all, important is who's the primary applicant or
Okay.
a primary borrower.
Okay.
Bank needs to see the primary borrower. If the wife is a co-borrower, which means we are clubbing income, then we need her income documents. But if we
Okay.
say husband is the primary borrower, wife is just a co-applicant, then we don't need wife's income document.
Okay. So still, because in a lot of cases it happens that,
Yeah.
say, for example, everything is on the husband's name in terms of, the income and everything. Wife is, say, for example, a housewife and doesn't have strong income documents.
She can still
That's
become
okay.
a co-applicant on the property.
They still can
and on
own
the
the
loan.
property
Yeah.
jointly,
Yeah.
but the loan will be processed on the name of the husband.
Correct. He
Okay.
will be the borrower, which means his life insurance is covered.
Okay.
Tomorrow his death happens, bank can claim and close the mortgage.
Okay.
Yeah.
Okay. Now, coming on this point,
Yeah.
when you take a mortgage over here,
Yeah.
life insurance is compulsory, right?
Most, you can say 90% of the banks are taking it. One or two banks are doing exception, but that is their credit risk call. They are doing it right now because they feel they can manage it in their portfolio insurance. So it's
Got
a
it.
bank's call.
Okay. But it's always advisable to take the.
On a serious note, anyone who borrows a big mortgage
Yeah.
should get himself insured. No one knows about the future.
True.
So it's better that tomorrow, if there is an insurance in place, the bank just claims the life insurance and gives the property to that individual's legal hire. Could be kids, could be wife, could be
Right.
parents, whatever.
So basically, if you have insurance when you've taken
It makes
a mortgage,
life easier.
it makes life much easier because people who are going to inherit the property get it mortgage
It
free.
makes life more easier at that stage.
True.
Second, life insurance cost is also very nominal.
Got
It's
it.
not that expensive as of today. Unless you have done a medical test for the applicant where he has certain diseases because of which the premium is spiked up.
Right.
But if it's a normal individual 4 million loan where there is no medical, the life insurance premium is very nominal for an individual to feel this cost has to be saved.
Got it.
That's why.
Got it. Okay. Now tell me something. Off lately, there were certain rules which changed. The central bank said that you cannot finance the 4% DLD and the 2% agency commission, which previously used to happen. So what is the change which has happened?
Initially, banks were financing 80 or 70% as per the total LTV of the cost.
Right.
So either someone was getting 84% or someone was getting
This
74%.
is for residents.
Residents.
Right.
Correct. Non-residents were also getting on
Yeah.
a bank-to-bank basis. But the whole change happened where the bank felt, looking at the business happening or looking at the trend, they want to cut down on it. So
Right.
that's why a circular was raised. And now no banks finance a portion of the associated fees, which means if today a client is buying a property less than 5 million,
Yeah.
he will get 80% finance,
Okay.
26 is pocket contribution.
Good.
5 million above property value, 70% finance, 36 is his pocket contribution.
Okay. Okay.
Yeah.
Got it. And how much time does this whole process take? Because a lot of people today have bought offline properties.
Yeah.
They want to utilize this, the bank facility when the property comes on handover,
Correct.
where their property, say they have to pay 40% on handover, 50, whatever.
Correct.
Right. Now, when does a person need to actually start the mortgage process? Because maybe he's bought a property just now, handover is after 2 years. So
Correct.
obviously the bank is not going to fund today.
Correct.
So when do they need to start the process in order to be safe and secure to meet the timelines and not default?
If you feel, the honest answer would be to get in touch with the mortgage broker 6 months in advance,
Right.
to understand your eligibility or what you need to be aware that the bank is going to check. So then you are well prepared that when the right time comes, I give those required documents,
Right.
and I don't have a delay in arranging them. Many
Right.
times, many customers are based in countries where the bank statement and documents need to be translated.
Right.
Every country, the timeline is different for translation.
True.
Depending on the size of the document.
Right.
Someone may have 50 documents that could take 1 month as well.
Yeah.
So that's why it's better that prior to 6 months of handover, the client can get in touch with the mortgage broker, understand the paperwork, be well prepared, and then when it's 2 months prior to the handover, get the mortgage loan upright.
This is a very good point which you've given. So anybody listening to this, guys, or
Yep.
watching this, if you're trying to get a loan or mortgage on your handover payment, prepare in advance, 6 months before. Get in touch with Amit to know your eligibility. And I think also it's enough time if you have to prepare or keep some balances in your account.
Because many times clients are not aware of the policy.
Right.
So it's better that they get the heads up and then they are prepared for it.
Got it. Okay, that's a great thing. Now, Amit, coming to the resident finance,
Yeah.
it still stands at 20% up to 5 million,
Correct.
right? So up a property up to 5 million, a resident living here can get 20%. Now,
80%. Sorry.
80%, sorry.
20
20
is
is the
contribution.
contribution and 80% is the bank gives. Now, a lot of times what is happening is people have this question
Yeah.
that if I become a UAE resident,
Yeah.
will the bank give me 20%?
Correct.
Right? Maybe they buy, say for example, they open up a business immediately or whatever, and they're like, then the bank will give me 80%. So what is the answer on that?
Tahir, the fact is, all the banks are lending on an individual income. None
Right.
of the banks are lending on the visa status.
Right.
So for them, it is very simple that if Amit has a visa in UAE from an employer, he should have income from that employer.
Right.
Correct. Amit has a visa but no income. He's still treated as a non-resident because
Okay.
I would have taken a visa for some health reason or some regular reason of coming and going. My parents are staying here, so I've taken a visa
Right.
for some odd reason.
Or golden visa for that
Oh,
matter.
Okay, golden visa has been coming picture in last few
Yeah.
years, but earlier there were people whose kids
Yes.
were studying here, so they took a visa, but it was easier to come and meet their children and all that.
True.
But the fact is, even if you have a golden visa, what the bank is looking at, which is the country where your income is generated to underwrite you for the loan.
Got it.
So if someone has a golden visa but no income in UAE, income is back home in UK, US, Canada, Australia, he will be treated as a non-resident.
Right.
So visa may help us getting his account open easily, getting him a life insurance done easily. That's it.
That's it.
Yeah.
But just
On
because,
the lending parameter, nothing changes.
But so basically, if someone buys an off-land property, gets a golden visa, should not think that they'll get 80% mortgage. They'll only get 60% unless they have a business or
or they
a
have
salary
created
here,
an income
over here.
the time they bought the house.
Right.
There are people who started working here as well, migrated here, got a job.
Yeah.
Or there are people who have moved here, started a business for 1 year. Maybe there we can look at the business profile and try.
Now, we all know that last 2-3 years, the
Yeah.
prices of properties have
Increase
substantially. A lot of people are refinancing
Correct.
or getting equity out to buy another property.
Correct.
So how does that work?
Assume I had done a loan. I'll share an example. A client had bought a property in Amalfi.
Right.
He bought the house at
I know who
7.5
you're talking about.
million.
Yes.
He bought the house at 7.5 million
Yes.
when it was under construction.
True.
Okay. So when he got the handover, I did his first loan for 3 million. Just got him the handover from Dubai Properties because it was Mira's and Dubai
Yeah.
Holdings that time. Later on, that house became 12 million.
Correct.
He wanted to buy another house. So I got him a top up where he got in hand 5 million. And with that 5, he purchased another property
Right.
in Dubai. Later on, in 2 years more, that property became 22 million.
Correct.
He again took a top up and bought another 5 million house. So this is just because of the COVID and the initial years, it's
Right.
been with that space. But not all properties will have that appreciation.
Right.
But there are clients who have got villas and townhouses where the scope of appreciation is higher compared to an
Right.
apartment. They have done a top up, bought something off plan, where they see that, okay, when the handover comes, we'll again see an appreciation.
Right.
So a lot of that is happening. There are clients who have old properties in Arabian Ranches 1, Meadows,
True.
Springs, who have taken a top up, Jumeirah Island as well. Most of the cases I've seen of Jumeirah Islands, where the top up is taken because of the current value, and a good upgrade is done on the unit, which has fetched them more 10 million as well.
True.
But like Jumeirah
Yes,
Islands
yes.
is being sold at 25-30 million.
Yes.
Initially, I have done loans at 5 million as well,
Correct.
where the property value was 6.
Yeah,
So
true.
that's why.
Okay. But what is the criteria if someone has a property? Let's assume the client doesn't have a loan, but just has a property already.
Yeah.
Okay. And is a non-resident.
Correct.
Or a resident. Resident, I believe he can. So how much equity can they pull out of it? Say, let's just to put number and to make it simpler for people listening, let's assume the property value is 1 million dirham.
Okay.
Okay. So how much money can they get?
Salaried resident client can get 80%. He can get 800,000 to buy another property.
But it's specifically to buy another property.
Correct. Because
not to take the money and use somewhere else.
No, he can't get for any other purpose, because in 1 million house also, if he wants to renovate, they may give 200, 300.
Right.
It's not practical that in a 1 million house, you will do an upgrade of 800,000.
Exactly.
So it has to fit the bill with that criteria.
But the bank, so basically, if the person is buying a property today, the bank will give 80% to buy the property, a new property.
Correct.
Right. But if the property is already fully paid, then in that case, the 80% or the 60%, depending on resident, non-resident, will be given only to acquire another property.
Another property, maybe he already has a property, he just needs to pay to a developer a handover payment.
Right.
Could be done both.
But has to be against.
The logic is it should revolve in real estate. The money which is there in real estate can only revolve in real estate. He can buy a warehouse, he can buy a building.
Any type of property.
Any real estate investment.
And is there a difference in the rate of interest when you're taking equity out and taking a mortgage to buy a property?
80% of the banks, there is no difference.
Okay.
Only the processing fee is high when they are releasing equity to the client.
Okay.
20% of the banks have slight variation of 1% because they want to keep a differentiation in their portfolio where they feel they should earn more if the client is coming us for an equity release.
Right. Hey guys, just want to take a brief moment to talk more about Prime Capital Real Estate, a boutique real estate firm based here in Dubai. If you need any help with investing in properties in Dubai, please do reach out to me on any of my social media handles at Tahir Majitia. We don't just sell you a property, we're here to build a long-term relationship. And what that means is we're here to not just sell you a property, but make sure that tomorrow if you want to resell the property, you want to rent the property, you want to get a golden visa, you need help setting up a business over here or a bank account, we are there for you. A one-stop shop. You don't need to go to 10 people and do 10 different things. We're here to help you, a one-stop solution. If you want to speak to me ever, do reach out to me on any of my social media handles at Tahir Majitia. And now back to the show. And as we speak, Amit, and I know this keeps changing every quarter, but as we speak, what are the interest rates going on currently in UAE?
So the lowest right now is in the range of 3.99. That's the majority famous rate.
Okay.
There are one or two banks who do 3.98 or 3.75.
Right.
But then you have to understand some bank which is giving the lowest rate is heavily loaded.
Right.
So clients don't feel they want the cheapest, but they don't understand that that particular bank may take 2 months for a pre-approval.
Got it.
Because everyone wants to go for the lowest.
Right.
So that's why I generally target clients with 3.99 because 2-3 banks offer that range. So then you can offer 3 banks to the client.
And how much is the difference in the rate of interest between a bank giving a loan to a resident client and a non-resident client?
1%, 1 to 1.5, depending on the bank.
Okay. Depending on the bank, it's 1 to 1.5%.
Minimum 1% gap is kept just for them to earn on that separate portfolio because the risk is high. The whole thought is a non-resident client cannot be tracked as well in future.
Right.
So that's why bank feels that the spread should be high, the risk is high.
One question, when a bank gives a loan to a non-resident client, does the bank open up a bank account for the client?
Yes. After the pre-approval, they open up the account.
Okay. Yeah. And how long does the whole process take?
It depends. If the client takes a pre-approval, starts looking for a property, within that time frame, they open the account. 1 or 2 banks take 2-3 days because they have seen his KYC documents, compliance approval is there. 1 or 2 banks may take a week or 10 days more, depending on their compliance paperwork, depending on the client's profile back home, depending on his nationality.
Right.
Okay. That's why.
Okay. Got it. And how much time does then the bank take to disburse the finance? Like once they've got a pre-approval, all the paperwork is in place, then how much time does the whole process
We generally
take?
tell a client 2 months time because right now all banks are heavily loaded.
Right.
So You have to give that time frame to the client. So in 2 months, a transaction can be completed for a non-resident. For a resident, in a month, everything can be done.
And if it's a non-resident client, does the client have to come here physically to sign any documents?
Yes. All bank loan documents
Right.
have to be signed within the country's borders. And the account opening has to happen within the country. So those two documents,
Right.
he has to physically fly to UAE, do it. The land department he can represent with a POA if he travel.
Yeah, because everything else happens remotely now.
But they don't accept
when it is a
POA.
bank involved, because they are lending money, they want the person to be physically here.
That is practical. That
Yes.
bank is not demanding more.
Of course.
People don't buy properties every week, every month. So if someone is investing,
Yeah.
borrowing money,
Yeah.
I'm sure he should have that much thought process clear that, okay, I'll have to travel once.
Right.
If he's that big, then he doesn't need the bank, no.
Right.
Then he can buy cash.
True.
Yeah.
Okay. And do non-resident clients also get equity release for, say, upgrades if they want to upgrade their villa or property?
Yes, they also get.
They also get.
Yeah.
Okay. I mean, now coming to resident clients, what is the minimum salary required for a person to get a home loan in Dubai?
As of today, the lowest is 10,000 dirhams.
Okay.
Anything less than 10 doesn't qualify to get a mortgage. Minimum 10,000 fixed income should be there.
So basically a fixed salary of 10,000 dirhams.
Last 6 months bank statement should have 10,000 dirham being credited to his account.
And if a person has a 10,000 dirham salary, how much loan can he get?
He qualifies to get 720,000.
720,000 dirhams.
Yeah, because there is a central bank rule that whatever is your annual income,
right,
you can't borrow more than 7 times of the same.
Okay.
So 120 into 7, that is the maximum loan amount.
Okay. So so basically he can probably look at a property of somewhere around 900 to a million, depending on how much down payment is.
850 to 900. So he qualifies for that 80% within that.
Within that much. Okay. Yeah. Okay. Got it. And the processing time for residents is also the same as non-residents?
Residents' approvals are much faster because in a day, there are banks who give a pre-approval to a salaried client within 2 days as well.
Right.
So that's much faster. So for resident, you can say if the seller doesn't have a loan, 1 month, everything can be completed. If the seller has a loan, assume 45 days.
Okay. Yeah. Okay. Now tell me, what happens if, say, someone is today over here, has a salary or a business, whatever, has taken a home loan.
Yeah.
And tomorrow, for whatever reasons, he's, moving out of the UAE.
Okay.
Does his loan get affected? Like, will the bank ask him to pay back? Or how does that work?
It doesn't get affected. He can inform the bank that I'm moving out of the country. I've got a job somewhere outside. Share the offer letter.
Yeah.
Bank may convert his loan from a resident to a non-resident. He pays on time. Bank has no issues.
Okay.
So bank also doesn't want to lose business. And it's very incorrect for someone to tell the client that, boss, because you were resident, I gave you loan.
Yeah.
Now you're going to a country outside us. Just settle the loan. It's not practical.
Right.
Maybe the property value is such he doesn't want to sell now. He wants to hold back.
Yeah.
The property is rented. Maybe his parents are based still here. Or his wife may stay here. Kids are studying. He's just moving out for income purpose. That could also be a reason.
And does this percentage differ with properties like residential or commercial properties?
Interest rates differ from residential to commercial. Yeah. Residential rates are cheaper.
Okay.
Reason being the demand is higher and the risk is less. Now, if you compare, there are more number of people who will buy residential properties because salaried, self-employed both need a house.
Yes.
But if you look at commercial properties, 90% are self-employed who will invest in commercial for themselves or investment. It is very 10% salaried people who feel they want to venture out into commercial property for investments.
Right.
So that's why that portion is very small. 90% of the banks focus on residential because that's their core business. 10% is what they do commercial. And all banks don't like commercial as well.
Okay.
Because after COVID, if you see more of flexi desk, more of business centers,
work from
home, remote working, hybrid working. So even the big corporates are doing that.
Right.
So then it makes less space for an individual or an investor to have high returns on commercial.
Got it.
Unless it is in the middle of the city, in downtown, somewhere. So location can change the thought process.
And how does, if someone has, say, a few properties where he's getting rent, someone is a property investor basically, let's say, and he's got 3-4 properties getting rent, is that considered as an income from the bank's perspective or no?
No. I'll tell you why, because it's not a stable income.
Right.
Tomorrow, that house can become vacant. Bank doesn't want a situation where they lend to an individual only on rental income.
Right.
And tomorrow, if two houses are vacant, it's very easier for the client to turn back and say, sorry, I can't repay.
Right.
So client is fine in his place. Bank gets impacted.
Right.
So the bank wants to lend to people who have a business income or a salary income. Rental is the secondary part.
Got it.
Only rental is there as a product with some banks, but it doesn't excite them because the risk is high.
Got it.
Okay. Because they understand this individual actually doesn't want to do a core business here and just playing with properties.
Right.
So tomorrow when the market changes, it's very easier for him to just leave and run.
Got it. Got it. Okay. And tell me, when it comes to settlement, right? What are the laws or the rules when it comes to paying the bank the money back? Someone took a loan today and say for whatever reasons, he's got the money or he's selling the property. What are the rules on foreclosure of loans?
It's standard 1% or 10,000, whichever is lower. And they have kept this because they want to entertain people switching properties much faster. Like today, I buy a house. In 6 months, I see appreciation. That appreciation is what will attract me to sell.
Right.
So if the penalty is less, I will go ahead and sell it.
So what do you mean by 10,000 and 1%?
Any given point of time, if the outstanding loan amount is less than $1 million, then it will be 1%. So if the loan amount is 800,000, 8,000 is the fees.
Right.
Anything above that, 10 million loan, 20 million loan, they will flat charge us 10,000 dirhams as an early settlement. Yes.
Irrespective of the loan value.
Of the loan value.
Okay. So that's a great thing for someone who's taken mortgage and then tomorrow if they feel they want to flip the property.
Correct.
They're just paying 10,000 dirhams and closing.
Because they don't want one loan to be a burden that people feel it difficult to settle or sell.
Right.
People may switch houses or do anything.
Okay. That's it. Now, Amit, one last question before we end this.
Sure.
A lot of times people think that I can go to the bank directly, whichever bank, and I can get my deal. What's the advantage of someone coming to someone like you versus going to a bank directly?
The logic is simple. A mortgage broker is someone who has access to all the banks.
Right.
So right now, if there are 14 banks lending, I and my entity has access to all 14 banks. If you come and meet me as a client, I can see your profile and tell you that Tahir, bank 1 and 2 will give you the highest loan amount. Bank 3 and 4 will give you the lowest interest rate. That makes your life easier in deciding which bank you want to proceed.
Right.
But if you directly go to any one bank, they would only offer you what their product is offering.
Correct.
So there won't be any comparison, or you won't benefit in knowing that this is also possible.
Right.
It's like going to a single cuisine restaurant where you'll get only one cuisine, or you're going to a multi-cuisine restaurant where you have more options so you can eat different and satisfy yourself.
And in terms of charges, when a person comes and takes mortgage through you or goes to a bank directly, is he paying any extra fees to you or how does that work?
He doesn't pay anything to us. Right. We don't charge unless it's a more of a structured case. We don't charge.
Right.
And because we are officially paid by the bank.
Right.
So you can say 99% cases we don't charge people. We help them and we do the end-to-end assistance or hand-holding till the transfer is completed.
Okay.
Yeah.
One other question which came to my mind right now, Amit, is what happens is a lot of people especially from the Western countries, from Europe, US, UK, they prefer buying properties in the name of companies.
Okay.
Okay. So many times they create a structure which is a holding company of their parent company or whatever and buy properties in that. Do banks mortgage those type of properties also which are held under the company's name?
There are 1 or 2 banks who do it,
okay,
but they don't do it for non-residents. They do it for residents because that company should have physical business here for the bank to underwrite it.
So if it's just a holding company where they're just holding the asset, in that case, the bank will not.
Because then that profile becomes the same only rental income profile, right? So the risk is higher.
Got it.
But if someone, for example, has an LLC company, physical business,
got it,
and due to external partners, he's bought an asset under company name, then there are 1 or 2 banks who could do an exception, lend them under company name. That can be done. But then in those cases, the interest rate is higher.
Okay.
The loan tenor is less.
Okay.
They don't get 25 years or 20 years.
Okay. And right now, otherwise, the tenure remains the same.
Maximum tenure is 25 years for a resident or a non-resident, depending on their age at maturity.
Okay. And what is that age which has to be?
For a salaried client, it's 65 years. For a self-employed, it is 70.
70.
Yeah.
Okay.
So which means if someone is 50, self-employed can get 20 years.
20 years.
Someone who's salaried at 50 can get till 70 as an exception if he has a golden visa or a high profile. That can
Yes.
also be done.
Okay. Okay.
But generally, it's capped at 65.
Okay. Okay. That was great information. Amit, as always, I really enjoy talking to you because you're very clear when it comes to communication and on point. Thank you so much for this. And if anybody wants to get in touch with you, how should they
I'm sure they
contact
can
you?
reach out to me on LinkedIn or on the mobile number which we'll put below
Yes.
the video, so they can
So
reach
guys, I'm going to be leaving Amit's contact details also in the description. So if you want to reach out to Amit, and Amit, thank you so much
out.
for
Thank you, Tahir.
taking time and joining us on
Thank
the
you
show.
for having me.
Thank you.
Take care.
Take care.
Bye.
So, guys, that was Amit on Dubai Real Estate Podcast. I hope you enjoyed the show. And if you want to get in touch with me for anything related to buying a property in Dubai, do reach out to me on any of my social media handles at Tahir Majitia. If you want to reach out to Amit, I'm also going to leave his contact details in the show description below. And I'll be back with another episode of the Dubai Real Estate Podcast very soon.